Hello and welcome to this Wednesday on Trading Growth and Value Stocks. My name is James Boyd. We welcome you here today. We got Kevin Horner in the chat. We welcome him and all of you here today. We got with us Will with us. Hello, Will. Silas, Jump In Joe A, Jay Richardson, GT, or also known as Gary Taylor. Sam with us. Yes, we will talk about Dell. They got earnings coming up. And also we got with us Bill with us. Hello, Bill, and many others. Let's go ahead and get started. Now, today we want to kind of focus on trading growth and value stocks. Occasionally we might bring in income examples as well. When we talk about those three categories, growth, value, and income, most of the time we're going to talk about growth and value and got some examples here that we could talk about today, technically and fundamentally. Now, my name is James Boyd. I normally teach at this time. This class is being recorded and it is live. Now, as we get started, remember you could follow Kevin and myself on X. We do post educational content and announcements there. There's my handle. Kevin will post his in the chat. That way you can click on it and follow him as well. Now, as we get started, remember the information I talk about here today is done for general informational purposes only. Should not be considered an individualized recommendation. They are examples. Now, when we talk about examples, we will do those on the Paper Money software application. When we talk about investing, understand if we talk about a stock that, let's say, pays a dividend, understand that they may reduce or stop paying that dividend. They may also increase it. They also may give a special dividend. More of the story is it's not constant. They could change the dividend policy. Also, when we talk about investing in stocks, it involves risk, including loss of principal. Now, what I want to do here today is I want to take a quick look at some markets. I do want to also talk about some stocks that are going into some of these upcoming earnings today. NVIDIA, you got Dell coming up and so on. And I wanted to kind of talk about some of those as examples. We will also kind of follow through on some examples we talked about yesterday and the previous day and look and kind of see, kind of sometimes talk about some stocks we're going to keep an eye on. I want to circle back on that and see if they're kind of more setting up from what we talked about previously. Now, super quick, let's take a look at the, let's say the SPX. SPX is sitting right here at the support level. I know what you're saying. You're saying just give me a bounce, okay? You got a prior high, which was about a week and a half ago. When we look at the 10-period moving average, you're going to see that has gone green here today. We could actually say the first sign of turning is the 10-period moving average going green, which bulk majority of the time is going to be when the price is above the 10-period moving average. Let me just kind of show you what this looks like. When the 10-period moving average went green down there, price got above the 10, right? When we actually had a turn right here, same idea, right? Price above the 10. Same thing right here, price above the 10. So if you do not close above the 10-period moving average, you're not really getting that turn on that shorter-term moving average. Now, if we take also look at, let's say, the SPX EW. Now remember, the SPX, top-heavy technology. So how this chart does is dependent upon a large majority of how the tech sector does. If you bring up, let's say, the equal weight, now, I'll be the first to tell you, sometimes you just always like the market to crash higher, okay? Sometimes that's not a great thing because over time you do not get support levels built in. Really what we've seen on the equal weight is we've been seeing these little plateaus, right? Little run up, pull back, run up, pull back, okay? Run up, pull back, run up, pull back. Pullbacks are better when you're looking back on them. Running up and pulling back, running up and pulling back. Again, a process. You also have to kind of understand that underneath this trend, you would sure like that there's technical support levels, higher lows, which takes time, which is what I'm saying. But also understand that underneath this trend, there should be businesses that are actually accumulating revenue and actually making money and so on and so on, okay? I mean, it's a process, okay? So if we look at the equal weight, you're going to see that if we take a look, and I'll zoom in on that, well, today would be potentially, if we closed here, might be the first day where the 20-period moving average line, this red line, turns back green. If we can close here and or higher. That 10-period moving average, when we actually started to close above there, it didn't do it there. Second time we closed above it, right there, it did. Last 4 days, that equal weight index has been turning, well, it actually turned green. Now, also to kind of note here, when we take a look at, let's say, just fast fire on the NASDAQ, it's back down near the support area. Not a whole lot to say there. And if you look at, let's say, the Russell, that is still kind of showing some weakness on the daily chart. The thing you got to remember on that when you look at the Russell on the daily chart, you can say, oh, it's signs of weakness, etc. And it's true. But as we talked about yesterday, support's an area. Is it like 5% lower than that? No, it's probably 1% lower than that. And if we actually pull this up on a weekly chart, it's probably not as weak as we really think it is. I mean, technically, if we look at the last higher low, the last low is 29.36. The steepest one we actually had was about 29.93. Those are the two markers. Definitely would say the MACD on the smaller caps weaker. Again, if the smaller caps are weak, they're linked to the technology space, okay, which we know has been weak. Now, if we look at where we are now, we're barely 2% off the all-time high. So let's put it in context here, okay? If we said the small caps, is that going to be a focus of ours? The answer is no. We want to look at the larger caps, the battleships, the proven businesses, etc. Now, super quick on the front of sectors. I'll keep with the weekly charts for just a moment. The basic materials as far as the sector. Okay, now remember this. We always think just stocks, 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 and stocks, and stocks, and stocks, more stocks. You don't have to buy the stock. You might consider buying the sector and or industry group, okay, or something that's tracking or trying to track an index. That basic materials is kind of getting out of a little price pattern, if you will. Maybe like some lower highs, higher lows, squeezing to the upside. Last week, a little bullish engulfing. Obviously, when we talk about basic materials, we're thinking, okay, maybe some precious metals. We'll come back to that in just a second. Keep an eye on the transports, okay? $ DJT, I said before, I don't like that symbol for what we're normally looking at. Look at the symbol that we talk about on Fridays. $ IXRE, that has actually done better than you think it would with the rise of rates. The communications, keep an eye on that. That's going to be the $ IXC. Remember, that is top heavy. That's kind of showing reversal potential. It's going to be Google, Meta, and double check me. Oh, how could I forget? Now, can anyone tell me the two that actually three? If we went to analyze just real quick, let's go to Market Watch. Let's go to Visualize, okay? Communications. And there it is. Communications, Google and Meta, which I said that. But the other ones that kind of we said, hey, some people think are boring, but there's times where the investor might look at those. Verizon and AT&T, but also really the Netflix as well. Those are probably three that we're really thinking. I think the one that we should point out, because it has done fairly decent, is probably Disney, okay? Just depends if you kind of, some might choose Netflix over Disney. Disney's had a little push. The ones we've talked about are Verizon, T, and Netflix. We'll come to those. Now, if we also take a look at, let's say, the other one, which we'll make mention of, financials is within stone's throw of actually taking out the prior high. God, you wouldn't think so. But if you kind of take a look at, we talked about Goldman Sachs yesterday, they're showing a red candle, but the red candle doesn't mean squat if that price is above the moving average. This could just be a pause. This could be the first day of hold, meaning you get a red candle and then the next day it does hold. Or we get a red candle, close higher gap. The red candle, when it's above the shorter term moving averages or both, that's the setup for a bounce setup. Let's just be clear on that. Now, I want to kind of look at a couple examples just real quick that we talked about yesterday. And I want to go back to just real quick a couple stocks, okay? So first is we got an alert yesterday on Philip Morris. Did anyone else get an alert on that? Anyone? Okay. Now, if we look at, let's say, Philip Morris, and let's back this off for just a second. And I'm going to look at this on a 3-year weekly for just a moment. This is what the trend is showing, okay? Now, we're going to look at its fundamentals in just a moment, and then we're going to look to kind of do some trade examples. So if we look at this, higher lows, okay, on the chart, equal highs. Now, if you need a little bit of help on technical analysis, seeing that support and resistance, We talked about using the green and red dots yesterday when I taught the class for Barbara on getting started with technical analysis. Had a little fun, right? Had a little fun. Now, what you're going to see is on the right-hand side, squeezing to the upside. High or low. Remember, those little green dots, okay, they're there, getting a little bit of a push. So we had a dot there, green dot, green dot, green dot. Higher lows on the price chart. Now, what I want to do is I want to bring up, let's bring this up, and I want to kind of go to this just real quick. I want to look, let's go to schwab.com. And what I want to do in this case is I want to kind of take a look at kind of, how's it been doing, but then also kind of seeing who's also in the group, etc. How does it compare? Now, what I'm going to do is let's bring this up, and we can fast fire through this. What I'm going to do is in this case is we're going to bring up Philip Morris, and I want to kind of also see the dividend information. We're getting around that time where a lot of these companies are going to start paying dividends getting into September. So first off, the dividend over the last 4 quarters has really been, now these are the actual paid dividends, Q3 2026. Previous pay date was the 20th. So that we're not going to get in again until about October 20th for this example. Quarterly frequency, the dividend on a dollar-wise, 5.88, 3% on the yield, okay, percentage-wise. Now, when we actually pull this up, if we want to kind of see more information about that and historical, all we had to do is just go back on that, is just click on where it says show more. That way you can get a history of these previous years. If I click on show more, okay, I'm going to get a graph as of that, and it's a yearly, 2018, 19, 20, 21, 22, and so on, okay? They dipped in 23. That's kind of where dividends policy can change. Those are the year-over-year percentage changes. And now what we see is kind of going into you're going to also see as far as how much are they paying out of their earnings per share. Now, this is kind of interesting when you kind of take a look at 84%. Can anyone else tell me an industry group that pays out even higher percentage of the net income? It would be the real estate, okay? 84% being paid out, okay? Pretty amazing. Net coverage ratio. So they're actually looking at the net income over what the dividend is, 117. You sure hope that's over 100, okay? Because it's covering the dividend. But really, when you kind of think about this, paying out 84% to dividend holders, okay? Shareholders. Now, what I want to do is when we come back to this, let's go back and scroll down for just a moment. When we look at the earnings, this is the upcoming earnings. Of course, I'd like to kind of see this on a nice little incline. I want to show you this because we're going to look at some growth stocks, but I want to kind of show you some comparison. When you look at, let's say, Philip Morris, it doesn't have sequential growth. Has maybe some cyclicality to it. More of the story is it's probably holding right around 220-ish per quarter. Historical earnings, I mean, beat, but again, it's not stair-stepping to the upside. So when you look at investing, you got to ask yourself, am I buying something that's inelastic or elastic? Inelastic meaning people need to have it, okay? Or B, they want to have it. Want to have it might be, let's say, a vacation. Need to have it means like food and basic items like that, right? Now, when we also look at this, the biggest reason why we bring this up is who are their competitors. A lot of times we see a stock and we just think that's it. That's not true. When we also look at, let's say, we're going to look at both these, Philip Morris and Moe, okay? Now, obviously, Moe really being that third one in. So Philip Morris, Moe. We can now scroll down and I want to kind of see some just quick comparisons. When we look at the net profit margin, again, we're talking about profitability. Money attracts money. That net profit margin of Moe's is higher. Return on assets is higher, okay? When we also look at, let's say, the earnings per share, okay? 696 compared to 475. That doesn't tell the whole story because it doesn't tell us the number of shares, okay? When we look at the price to earnings, 27 to 14. Now, The last time we looked at actually Altria went down on earnings and the price dropped on earnings. And someone asked me, what do you think about Altria dropping down? And I said, sometimes when prices drop down, sometimes it's just the opportunity. There's still an underlying business, but there's a reaction by investors that causes the price to go down. Prices going down actually means the assuming the business can withhold and keep going, those metrics just become more attractive. Okay? And also the yield becomes more attractive. Okay? So the price going down just because someone wanted to sell, who cares? Okay? As long as that business is still there and the price goes down, we're not thinking like, oh no, it's horrible. We're thinking like, an investor, like a Warren Buffett says, look, the business is still there, price has gone down, there could be more value. Now, when we also take a look at, let's say, sales per share, 4, when we also scroll down and just kind of see, look at annual growth rates, here's the bad part, right? Here's why we like to look at both. When you look at the sales growth rate, this is historical, it was negative. Let's just even say the word flat. You look at PM, it's 8.9. Again, this is where sometimes people want to look for something that's growing. It's PM that's growing. Now, James, could you actually have both? I didn't say yes. I just said that some people might want to consider both. Okay? So now, when you look at the forecast, so people do look at the past, yes, but they also want to say, what do you think the future could be? When you look at that actually EPS growth forecast 1 year, it's still PM. It's 4.85, okay, for Mo. And we look at the 3 to 5 year, it's still PM, okay? Now, so why would actually someone buy Mo? Well, price multiples are actually lower. If someone says, like, I want to actually find something that actually has growth attached to it, it's PM, PM, and more PM. The biggest actually thing is that's the forecast. But why does someone buy Altria? It goes back to what we've been hammering. Dividend, dividend, and more dividend, okay? That yield actually on Mo is 6.23%. So if someone put the money in fixed income, if they did, let's say they get 4.5%, this is 6.23, but with this, we're trying to also get some price appreciation. Are you with me? Now, let's show the example if the investor said, look, I'm going to buy both, okay? Now, I'm looking at the weekly chart. Let's go back to the daily chart on this, 1 year daily. This is what the daily chart looks like. Let's take these lines off, okay? And what you're now going to notice on the bottom, where do we see support? Remember what we said yesterday? When we see support, the last 2 to 3 weeks. Well, last 2 to 3 weeks, I see dot, dot, dot. So without even looking anymore, I know our support level is right around $185. Now, if I looked at, let's say, the resistance, the red dots, there, it's a little bit more diagonal. What does that tell us about trend? Well, if those dots are not horizontal, they're a little bit more with a tilt to them. There's been some times where the chart has made higher highs. Is that a bad thing? No, of course not. It's not a bad thing. Now, if I went back and said, look, I'm going to right click on this chart. Let me go back to paid money count. Let's put this in there. And what I'm going to do, PM. Okay, there it is. And what I'm going to do is I'm going to right click on the chart. Now, we could actually say language like, oh, we're too late. Okay. Well, it's very doubtful that we're too late because intraday we just fell right down to the upward trending 10-period moving average. We could double check and say, how far are we off that 10-day moving average? And the answer is we're about 2%. Not probably too late. We're barely off it. Okay. Now, if we right click on this chart, I also want you to kind of notice something. There was a gap down right there. Now, what's the significance of that gap? Well, if you close above it, you can actually try to fill in the gap. The high right there, that's not a resistance. It's a high for a reason. A low is a low, a high is a high. Okay? A high is a 1 data point, a low is 1 data point. You get multiple touches at the high, you get resistance, you get multiple touches at the low, you get support. Okay? It's not this, a high is not the same thing as resistance, and or low is not the same thing as support. Right click on the chart, buy custom, and I'm going to go with stop. Now, the investor might say, look, I don't want to just get in and target the prior high and get out. Now, we're all different, aren't we? We know we're all special, aren't we? Okay? There are some people that say, look, if we went up to 207, I'd be happy with that. Some people are trying to put the capital to work and try to get exposure to the sector, the industry group, the stock, and so on. I'm going to put the stop underneath this secondary moving average, the 190.80. 190.80, okay? Less 2%, and it's going to give us 186.98, okay? So 186.98. Now, there's a question from MBH. James, I have your package. How did you turn on the red dots? Let me show you in just a second. 186.98, okay? 186.98. Stop day GTC. Okay, now this account 172. So let's say if we took maximum 5% of that portfolio, capital wise, did a minus, need a times, there it is, 86.33. So that represents the most capital that we're going to put into the position. Now, remember, we're not buying fractional shares in the paper money account. That doesn't work that great for myself that I've seen. It's going to be about 44 shares of stock. We're going to take the 44 shares of stock. Okay. There it is. 44. There it is. Entry, stop. Remember how the stop works. If it goes to that price or less, sell the shares. Risk could fill at a lower price. We're going to go right back up to that test tube right there. Remember, the fourth one down, you're going to see that it says hold and close below low of high day. If we click on the gear setting, click on that, and normally, now I'm in the paper money account, and so it doesn't have the red dots on there. So this is what it would look like if you don't have those. Hold is showing the green dot. If we just want the red dot to help us see support and resistance and the trend and so on, just change that to yes. Now, we can see the green dot, green, 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 but now where are the red dots? Well, now if I click on OK, and then click on apply, there's those red dots, okay? Now, if again, go check. Now, by the way, let's bring this up. I think this would be worth bringing up. So yesterday, if we said, well, how would I find that class? If you don't have this calendar, get the calendar, bookmark it, and you can get the calendar by the link I just sent to you. Taught a class yesterday, getting started with technical analysis, okay, support and resistance. Let me actually send this to you, okay? If I actually said I want to watch this, I'm just going to give you the link to that class right there, okay? So I sent you that link right there in the chat. So if you don't have that, bring it up and just hold it there. You might watch it at maybe, well, I wouldn't watch it at 2 times speed. Maybe 1.25. And probably go in maybe 5 minutes, 10 minutes max, and we really get into the meat and potatoes on what we talked about there. Now, let's also bring back up, so trade example number 1, Philip Morris. Okay, if we said, why are we buying Philip Morris over Altria? The answer is growth, potential, historical, and potential future. If we also said, well, now what we're going to do is we're going to go back to, let's say that we're going to send that order. We talked about the stop. We talked about the risk of that. We're also going to go back and say, okay, when we look at Mo, now remember, now here's the thing, okay? When stocks go down, that doesn't mean they can't go back up, okay? Now, in the example, Mo went down, and it did, and it broke through the horizontal support level, okay? We had some touches right around the 68.58 level. Now, we talked about yesterday channel, and more channel. Now, I don't care if you've heard me talk about it before. If you have not done a trade based upon a channel, my feelings are hurt, okay? Now, when we start to see the stock, now remember, this being what this was old support, this should be resistance. So if the price is getting back up above that line, the resistance line isn't holding. So this is really, if you think about this, this is like classic break of resistance. Now, let's say the investor said, let's go back to the trade tab for just a second. The ex-dividend date, the first day the stock trades without the claim to the dividend is on 6/5. Excuse me, the last time we had ex-dividend date was June 15th. So the approximate ex-dividend date, without looking, might be somewhere right around September 15th. What does that mean? There's an upcoming dividend. What could that dividend be? $1.06. Okay. What does that yield on an annualized basis, given the current price, given the dividend of 106? Times 4 is 615. Okay. 6.15. Now, if we take a look at this, the investor might say, James, is it possible to try to make the dividend and maybe try to get the price appreciation? Well, that's the whole idea. Now, if we actually went back to this, we now see the stock. Now, remember, we bought the one that has more growth, okay? But now we're saying, could we maybe try to go for some price appreciation, but the dividend on top? Percentage movement, without even looking, okay? I'm not going to look. If this channel had like a channel width of 5 to 8%, 5%, we're thinking, okay, I got to look. We're on a video. But if it had maybe like a width of maybe 5%, okay, fine. It's thin. If it was like 8% from support to resistance, it's a little bit fattier, okay, more interesting. If that channel width was 10%, that's even more interesting, right? Bigger channel. Well, let's measure together. Now, from support to resistance, we see that kind of, okay, now, how much is it? I said 5%, it would be like narrow. 8%, medium, 10% channel width. Interesting, okay? This is 8%. Now, sometimes we see these moves go up very quickly. Now, does that happen all the time? No. Does it happen sometimes? Yes, okay? So what we're going to try to do is we're going to try to set that target, okay? We're going to right-click on the price graph. We're in the paid money account. Right-click, buy custom. We're going to put a target on this with OCO bracket. Now, if we look at this, and I'm going to show a comparison. Sam brought up Dell. We're going to show Dell, and then we're going to compare it to the Philip Morris and Mo we just did. Now, if you say language like, well, how did you find Philip Morris? How did you find Dell? Excuse me, like Altria, etc. Well, remember, we look in the Dow daily. We look in the S&P 100 daily. Okay, so if we went down to and said, okay, is the Philip Morris, is that in the Dow? No. Is it in the Philip Morris or Altria in the Dow Jones Industrial Average? No. But it is in the S&P 100. Okay, we look at that daily. Now, when we take a look at this, we're going to put the target there. I'm going to put the target right around $74. Okay. We like to shed a little bit off the target since we know, or resistance since we know it's an area. We'd rather get sold out a little early than not get there and then have the price fall. That's the idea of kind of putting it a little bit less. Maybe 0.5% to 1% lower. We're going to go dated GTC. And now what I'm going to do is I'm going to look and see. It's so easy when I got dots on the chart. Okay. Now, what do I mean by easy? Well, what I mean by easy is to kind of see these higher lows, right? There, and there. Okay, now I even have another little dot there. So think of this little spot, 66.93, as maybe an area where a technician might set a stop below. I think that's simple. You're out of your mind, okay? I'm not going to set it there. I'm going to set it at the second level, 65.32, okay? Now, I think you could probably tell by now. I'm not a fan of setting tight stops. I think all you just did is just probably, the reason why people set stops, a lot of times they don't want to lose money. But what you just did is just increase the probability of losing money. So, it's not a great strategy. Okay, you just did it to yourself. So the biggest actually thing is we're going to set a little bit looser stop, 65.32, that higher low, less 2%. And it's going to give us a stop at 64.01. 64.01. Trade number 2, okay, Altria. Okay, trade number 1 was Philip Morris. Trade number 2 was Altria. Target 74. Sell it if it gets to that price or higher. Sell it if it gets to this price or lower. Clearly, when this stock broke down on earnings and the stock went down, someone obviously is looking at the yield. Someone obviously is looking at the price multiples. And the lower it goes as long as it's supported by earnings, it could become more attractive. Okay. Now, what I'm going to do is going to go confirm and send. You're now going to see it right there. Remember, it's saying if it goes to that price or less, sell it. That stop is a market order. Okay. Send it. Okay. Now, what I'm now going to do is let's go back to Dell. Now, I feel like this has just been it's now some trades you're like, gosh, that was easy. I mean, hit the easy button. I mean, sometimes the trends just go up. Other ones, and that's been like the gold stocks lately. But the biggest actually, sometimes it's not easy. Dell has been something that's just been like happy, sad, happy, sad, happy, sad. Which way is it going to go? And sometimes when you go back and look on the daily chart, that's how it feels because you're going on the day over day grind. When you look at this, though, why are some people kind of just biting into that Dell stock and just trying to hold on? Well, the biggest thing is it had a humongous run from 100 to 400. Now, we're talking about this year, okay, not back in 1959, okay? At the end of February, it went from 100 and then really in June. So we're talking about what? March, April, May, 3 full months. And the daggum stock went up that much from 100. And I'll just go from here to here. The stock just went up, what, 245% in 90 trading days. And so we're looking at the weekly chart on that. 14 bars would represent 14 weeks because we're looking at the weekly chart. Now, so the one thing that we would want to kind of say as technicians is the old support was 387. The recent support level, we have not fallen back down to the bottom of the channel. You guys smell anything unusual? Okay. Now, a lot of times, sometimes what we can see is when we break out of a channel, sometimes that stock, before it breaks out, it doesn't go down to the bottom of the channel. Dell tippy-toed right around the midsection of this channel on the weekly chart. If we could start to close again above that 454, some of those technicians are saying, you know what? The fact that we did not come back down to the bottom of the channel, some of these investors, now I'm going to use the word that Dale Reeves actually says. He calls it greedy buggers. Greedy buggers are when investors would say, yeah, I'm going to buy if it falls down to 387. But the price doesn't fall down to 387, meaning they're buying in the middle. Why? Well, because they're thinking it's going to probably break to the upside. They're trying to establish and build a position, even though it might not be at the low. Okay, now, if we went back to this chart and let's take a look at this as far as its fundamentals. Let's go back here. Now, when we pull this up, let's go right. Let me bring it back up. We're going to bring up Dell. I want to kind of show the differences between kind of more staplist value income type companies to more of those growth oriented. And I think the differences will be almost appalling. Okay. Now, if we actually go down a little bit, first off, when we look at, let's say, dividend, it does pay a dividend, but the dividend rate, which we're looking at the dollar amount. Some people like to look at the dollar amount. But if we really look at a yield, and why do they look at annual yield? Well, because they're trying to have a means of comparison. Okay. So like Altria's Moe's was 6%. Okay. When you look at Dell's, it's 0.56, a half of 1%. Okay. So the moral of the story is these growth, you're sacrificing dividends for the potential growth. Now, to get the growth, you got to typically handle more price fluctuation. Okay, more volatility. Okay, now, so that's the bad part is the investor's not just paid to sit in the stock here from the dividend. Got to weather that volatility. Now, when you scroll down a little bit, the earnings, okay, moving around, and these are the upcoming, this is the forecasted earnings. Now, when we look at the historical earnings, it's a little bit more of a stair step. Okay. Dark blue, estimate, actual. So when you look at the actual, you're going to kind of notice that it's like stairs. Okay, 232, 259, 389, 486. Now, if you take a look at this, the price to earnings, this is not like what we saw with Altria. So something, when you look at that price to earnings, now if we're probably up north above 25, maybe 30 on that price to earnings, probably tells us we're getting into that growth territory. The forward PE, which is usually lower than the price to earnings because the earnings per share, that denominator is the earnings per share looking out in time for the next year, is only 23. Not as expensive as you think it would be because it's been supported historically or in the future by what the earnings could be. Now, when you also look at the PEG ratio, that is actually surprising. Okay, that denominator is the earnings per share growth rate. Okay, on a percentage basis, that is not even one. Okay, so someone might say you're absolutely crazy to actually buy Dell. But if you actually said, look, what am I looking for? What would be considered value, or let's say the word cheap? If you had a PEG ratio below 1, that is viewed as value. Okay. Now, if we scroll this down for just a second, we're also going to see that information. Now, why are people still focusing on these type of stocks? Well, because to get these big type of percentage movements, okay, Seagate Technology, 67, 68, and so on. Now, that doesn't mean the trend is up right now, but that's the forecast. But when you look at like some of the net profit margins, example given like WDC, 72%. Anything with double digit would be growth. But here, when we actually take a look at this, if we actually look at Dell, that's not completely that small. Okay. Now, here's the thing. Dell's been around for a long time. And I think something that people kind of just, I don't know, sweep underneath the rug is when we look at the sales growth rate, okay? So when we talk about the sales growth, okay, 1 year, they were at 38, okay, 38. And we're talking about a company that started with $1 billion in sales to begin with. To have that type of growth, it's massive. Okay. Now remember, you don't get earnings per share before you get sales. You need sales first, but that's huge. Okay. Now, when we also look down here, just real quick, if I also see the profitability, these numbers, the one thing that Dell does do is razor thin margins. Their net profit margins are only 6%. So this is like Walmart, right? You're selling volume to get big revenue numbers and trying to get earnings per share. Lots of contracts, lots of units, and so on. When you look at, let's say, stocks like Seagate, WDC, they do not have those razor thin margins. They have bigger, fatter, puffier margins. Some investors like that. That's why those stocks went up a lot. Okay. Now let's go back to Dell just real quick. Now, when is its earnings? Those earnings are on 9/1. Now, I know what you're thinking. You're thinking, we don't know what's going to happen on earnings. That is true. Now, sometimes when you get the stock to maybe pull back going into earnings, some investors who wanted to profit take going into earnings, they might have already, some of them, profit taken, okay, to kind of scale their position down or sell out completely. What we're going to do is we're going to try to buy a half of a position, another one. Now, why a half? Well, the reason behind that is over the earnings, number one is we don't know how investors are going to trade the information once they receive it to confirm, did they hit their forecast? Did the company give any new or updated projections and so on? There's a lot of price uncertainty. Now, what I'm going to do is in this is, let's say we say, look, I'm not going to invest, let's say 7,000. I'm going to go back and say 3,500 or 3,750. Now, again, if we said, hey, we're going to set a tight stop, we don't want to set a tight stop. If we don't set a tight stop, that's going to push down the number of shares that we're really going to look at to buy. Okay. Now, if we said we're going to only take half position, it'd be 8 shares. So if I now come back and say 8 shares, and we need to be crystal clear on the gap risk. So if I say, look, we're going to buy the shares at the current price, set the stop below the 422. If we took 422 less 3%, okay, excuse me, less 2%, it's going to be 413. Now here's the con, okay? The con is on that earnings, when it announces the earnings, that price can gap down and slingshot back to the upside, just like it did on Target. Okay. So that's going to be something we need to be mindful of, the risk of this trade. If I did 413.56, okay. Now, if you said, I don't know what you mean by that, go look at TGT, how the stock gapped down on earnings and it came right back. Okay. Now, some people might say, James, I'm going to set this where it's only valid until after the earnings. Okay. I'm not going to allow it to get stopped out based on that earnings reaction. I want to get stopped out in kind of a normal market environment. Okay, something to think about. Data GTC, there it is. So third trade example is Dell. Okay, now here and here, we have not fallen back down to support. That is suspicious technically. Okay. That is kind of leading us to think that someone's building a position at a higher support level, speculating that that price might go higher. That's the idea. We're about ready to find out. Okay. Now, Sam talked about kind of doing a different type of strategy. The one thing about Dell is it does has some price volatility. This class is a stock class, hence a stock position. But Sam, I know what you mean. Confirm and send. Now, remember, we talked about the risk of the stop. We make mention of that. You can fill at a lower price, send the order. There it is. Now, I want to go back and just see just real quick. Yeah, so Bill actually says Dell servers were desired in AI data centers due to the AI. Look, the one thing that we'd have to say is Dell is more probably integrated into more corporations, okay? And I'm going to throw at schools, governments, etc. Do companies use Apple? Of course they do. But and Apple's closing the gap to some degree. But the biggest thing is we're not foolish, okay? Dell is probably still the main, okay, computer systems within many corporations, okay? Now, some of us we just can't stand that. But that's the world we live in, at least right now. Okay, now, other stocks that we're going to keep an eye on, and we've talked about keeping an eye on. Apple showing a brand new close above the high-low day, sitting right at the 20-period moving average. The UNH today showed a little reversal candle as well. That's a higher low from yesterday. Healthcare. When we also take a look at Microsoft, we talked about the yesterday and did a paper trade on that. Microsoft, we talked about crossovers yesterday. Microsoft is in step 2. Step 1, 10-period moving average goes green. Did. Step 2, crossover. Step 3, 20-period moving average going green. Not yet. In step 2. The more days we actually close above both moving averages, the greater chance of that moving average on Microsoft could turn green. That would be step number 3, meaning more confirmation of trend change. The one thing that we would actually have to say on Microsoft, at least right now, is Microsoft did trade, and if we close here, we'd be closing above the gap down price, so we can even start to actually see Microsoft reversing back up. Weekly chart on this, pull that back up. This is what it looks like, okay? That's been a pretty strong reversal on Microsoft. Go back and look at some of the fundamentals on that one. Now, the one thing I got to kind of say is other stocks are going to keep an eye on. Dash, okay? Marvell, MRVL, okay? FedEx, FDX. Keep an eye also on Berkshire Hathaway B shares. And the last one, but not least, John Deere, the big green machine, okay? So I'm out of my time here today. We did 3 trade examples. We talked about kind of some looking at revenue and growth, earnings per share wise, and then comparing that to Dell, okay? So also remember that when you look at stocks to evaluate them, don't just look at them technically, look at them fundamentally. Okay. Also, quick reminder that with what we talked about, you can also see other classes taught throughout the week or upcoming on the live webcast and virtual workshop. Okay, as well. So live webcast here. If we take a look at this, we're on the 26th. Next class coming up is managing an option portfolio with Brent Morse. I want to say thanks to Kevin for answering those questions in chat. Also, if you said, I'd like to learn more about the in-person events, Kevin will be traveling to New York. You can actually see an upcoming event this weekend in New York, the advanced options, but also the market drive, the next one, September 19th in Scottsdale, Arizona at the Phoenician. Now, I'm out of my time here today. Remember, with what we talked about here today, it was done for example, illustrative purposes only. Talk about trading growth and value. Did bring in a little income, okay? And remember that all investing involves risk. Stay tuned for Brent Morse coming up next. Don't forget to subscribe for free. You can also click on the thumbs up as well if you enjoyed today's video. Thanks so much. Take care. Bye-bye.